The path to a new Bitcoin all-time high is not clear yet. However, there are some signs that are confirming this big move is underway. That's what we're looking at in today's video, along with some of the altcoins that are looking relatively strong and what to avoid. You know exactly which altcoin I'm talking about.
Come on, you mother...
All right, guys, we got some big stuff to get into today, along with interest rates and some of the bad news that has come through for the stock market at this stage of the cycle. So we're going to get into the data. It's your home of macro cycle analysis with me, Jason Pizzino. We're looking at Bitcoin, cryptos, the stock markets, and the real estate cycle today, bringing it all together for you guys so you get a better understanding of the financial landscape. Links in the video description for TIA Crypto. We have a sale on premium very soon. So check that out to subscribe to the email list to be notified when that is live. All right, let's kick it off with the headlines. Trump turns up heat on Fed ahead of expected rate cuts. Now, what Trump is saying here is it's something that they know they shouldn't be doing before the election. My thoughts here are that people want to see an interest rate cut. It's not good for the market. You might have your own opinion on that. It's fair enough. But it's not good for the market because we're still seeing asset prices skyrocket, except for the last 24 hours. So we've got to get into that as well and what that means to the rotation of stocks at this stage of the seasonality, at the stage of the cycle leading into that election. May I remind you, 6 months ago, this looked almost identical with the dates starting from January down to July, and everyone was expecting interest rate cuts throughout the year. We all know now that there were no interest rate cuts throughout 2024, and potentially there may only be one or two or none. So if you're expecting this sort of thing to happen, probably unlikely that it turns out exactly like this. There is the opportunity, but it doesn't seem like it that way. And that is lending its hand into the uncertainty of the market at this stage of the seasonality, which I'll also show you in some of the data. But just over the 24-hour period, just overnight, we saw the S&P 500 drop 1.27%. So we're seeing a little bit of rotation from the big caps to the small caps. As we covered in yesterday's video, with this rotation, we are now seeing those laggards catch up. And exactly what does that look like? Well, you're seeing the white line here, which is the Russell 2000, the laggard stocks, the low caps, what people or investors are potentially selling out of the big caps into the lower caps. It's finally seeming like it's starting to happen, where you've got the low caps moving up and the high caps just remaining where they are. So if we're looking on a daily chart here, you can see that it's only been in the last week that the low caps have really caught up. If we're only measuring back to the lows here in April and May, then you can see that the low caps have been a better trade for the last week. But of course, trying to time things this short term is anyone's guess. If you go back over the longer term here, we can go back all the way to the October 2023 low, or even going back to the October and September 2022 lows. You can see that the orange line, which is the S&P 500, has been a much better return than the laggards here. But in terms of the laggards catching up, that's what we need to see for this stage of the cycle as well, so that you're starting to see some of that money rotating into the lower caps, all part of the winner's curse phase. In terms of the seasonality with July at the moment, now the prices have been rising for July, and what this shows is they tend to peak right around now. So it's from Ryan Detrick over here on X. In terms of the data over the last 73 years, the orange line shows what happens in July on each of the days of the month. And basically from around this point here, they flatline. And that's only if they've been up about 1% for the month and then flatline. But as you can see from the well, it's a blue line, but of course yellow's in the background, which causes it to go green. You can see that the market's been up about 3.5% for July. So maybe you'll see a slightly larger correction with that volatility. So bigger upside, maybe larger downside, and then start to flatline through there. That also shows up with the NASDAQ and the S&P 500 for the seasonality at this stage. So seasonal pattern over the last 50 odd years for the the NASDAQ here. The pink line is the current year. This goes up to the end of June. And of course, we saw July go a little higher. And now we've got that correction happening in the middle of July. You can see on the previous years here, the sitting president, the aggregate cycle, all election years, July has sort of had a peak, then a bit of a rollover. August gets going again. Still higher in September and October, except for the black line and the blue line here. So they're the sitting president running and the aggregate cycle. You can see that there is still a correction or pause trading range for September, October. Then you get into the election and the market starts to really take off after that point. So like I said in yesterday's video, I don't want to try and call a top, but there's always the possibility that you get some sort of correction after such significant rises. And maybe now is that time that the market is looking for at least a pause here as they rotate into some of those laggard stocks. This one here, July market performance, recent 21 years. So you've got the last 20 years here. The solid lines are the data points that have occurred. So your Dow Jones, your NASDAQ, Russell 2000, S&P, Russell 1000. So even worse stocks from that. And you can see the market into the middle of this month. So we're at the 18th today. 17th was the last trading day. Market's running up and then roughly sideways. They all do the same thing. So you can see that the blue line did climb high, which is the NASDAQ. And from the second half of the month, they don't do as big of a gain as they had in the first half of the month. Not that big of a deal, really. Same sort of thing here. That's the July performance, recent 20 years, election years. And this one here is just looking at the NASDAQ volume 1 year seasonal pattern. So through the summer months, a trading lull here. So basically not as much volume coming into the market through July, August, Northern Hemisphere summer months. Forget that in the South, it's winter. And basically after that point, so after August, some of that volume begins to pick up, which also lines up with the prices picking up later in the year as well. Again, not trying to call a top here, but I don't mind seeing any sort of sideways trading range that might trade between a 20% high for the year down to a 12 or a 16%. That's going to freak enough people out to think that it's over. And then when you think about the market psychology and the trading psychology, they're going to miss the low again and the market starts to climb up from that point. Remember, the winner's curse is the curse that you think you're a professional trader because you're making money in the market. Maybe you've only been in it 1 or 2 years. It's basically like the altcoin game. A lot of people think they're professional traders because the market's going up and they can buy anything and they keep making gains. So that's in a nutshell what the winner's curse is about. But this occurs across the real estate market where basically prices just keep going up and people think that they are professionals because they bought something and the price went up. But that happens in the winner's curse. Then they forget that there are times where the market either stalls or corrects, and that can squeeze a lot of people out. In terms of this data here, the small cap versus large cap ratio, when this thing flips, as you can see here, historic 1 week shift from large to small, it's usually not the greatest sign for smalls longer term. In summary of all of the data above, those looking for smaller stocks to finally have their time in the spotlight, essentially you're trying to pick up the laggards. There have been multiple false starts in recent years. So basically they can move higher and then correct. And you're thinking, why isn't this thing going up? Well, there are multiple false starts as the data has shown above here. While the post-pandemic rally showed the greatest promise, it too rolled over and frustrated those holding anything other than stocks with hefty market caps. So basically, it frustrated most that weren't holding any of the large caps. So, winner's curse, we had a look at this. This is the 18.6 year cycle. As I said in the intro, we've got Bitcoin, cryptos that I'm getting to, and Bitcoin, stock markets, and of course, real estate. You can see how the financial picture is all coming together, at least in my own opinion and my own analysis. Now onto the NASDAQ and where that sits today with that drop off, basically just showing that the tech stocks have dropped off over the last 24 hours and potentially rotating into some of those small caps or maybe into some cash, hoping for a bigger correction. May I remind you that the market has a lot of support levels to the downside that it could fall to, yet still remain bullish. So let's straighten this line up here. That's your 2021, 2022 all-time high. The same sort of thing goes for the NASDAQ. I was just showing here that NASDAQ was down 2.5%, but the S&P 500 shows it a little better. here is the top at the moment. This might not be the top. Remember, the month is not closed yet, and we're on a longer term time frame. To the downside, you've got the swing bottom, which is about 13% away, so plenty of support here. Doesn't pay to be fearful in a bull market. Then you've got the old all-time highs, roughly about 16% below the current peak. Then you've got the major 50% level, about 19 to 20% below the current peak. So plenty of buying support here. Just throwing you some up arrows so that you can see that there would be support if this market were to fall that far. Now, we haven't even gone into a red month yet. We're halfway through the month. So if I take this up and just do a longer, a shorter term 50% level, even a shorter term 50% level, basically just that swing there, you can see we've got even short-term support here at roughly 5,300 points. It's also the swing top, which is a nice sign there. You've got the 50% and the swing top there that could potentially put some support into the market, some buying support. And if that were the case, it's about 6 to 7%, which is the same sort of correction that we saw in April. So basically, if this were to be the top, you could potentially have a balanced correction at this point and nothing would change. It would freak the market out. They would probably be expecting 10 or 15%. I'm just talking about what I think happens with the trading psychology along the bull market, the macro bull market, so that you can be prepared in case you did see something like this. Nonetheless, maybe some sort of trading range begins to form and market just takes some time to get going as we lead into the election, as a lot of these particular seasonal patterns have shown. So that's a wrap of the bad news today for the stock markets, obviously being down a couple of percent on the NASDAQ and 1.3% on the S&P is something a little different to the norm, where they've basically been going up day after day, putting in new all-time highs and barely giving any investors a chance to get into a position. Now onto cryptos, with the greed hitting 61. So we're just cooling off here as Bitcoin had a red day, but not a lower price day. You can see that it didn't break the swing bottom of the previous day, but just that tiny day was enough to put the fear, enough to drop the greed off from 69 down to 61. So still quite volatile in the feelings in the market. Now, I've talked about, well, probably put in the title somewhere, about the confirmation of a massive move to the upside, and that looks in the form of particular lows like this. Now, Michael talked about it on his video yesterday, really great detail about how the Elliott wave patterns are forming here of the 1, 2, 1, 2 and the breakout, whereby this move to the downside probably won't happen based on this particular pattern. It is a very, very short-term pattern. And if you want to learn more about this, definitely go and check out Michael's video from yesterday. After this video, I'll leave a link to it in the video description right down here. There's Michael's channel there. You can click on and subscribe there so you get the update. So that talking about the confirmation has shown up several times in the past as well. This was one particular area through August, September, and then the breakout in October that really caught a lot of people by surprise. All of 2023, I was putting out videos and tweets around prices that the market, well, Bitcoin would never hit again. After I saw significant patterns like this, breakout from the tops here, and I got a little bit early on this one right here, I could almost tell that if the market were to break down to those levels that I said, then the bull market's over and it doesn't matter anyway. But having a very deep understanding of pivot points in the market is drastically going to help your investment decisions. A lot couldn't comprehend that the market can't break down from those levels and then bounce back to new highs. So this is all understanding structure of a market in terms of where we currently sit. So that particular confirmation, should it break down, then things are probably drastically going to change with the bull market. That would be a very important invalidation point. And so far, each of these levels that I publicly posted at the time saying Bitcoin will not go back under $20,000, almost a few days after that low happened, didn't happen. Bitcoin did not go under $20,000 once I saw this signal. Then, when we saw it break above these tops, which was the Wyckoff accumulation. I said Bitcoin's not going to go under $25,000 again. If it did, if it had some closes under there, structure's broken, game over. Doesn't matter at the end of the day if I'm wrong, because basically the cycle's over and you're going to see lower prices. Now, if you wanted to spare me $200 and $100, then yes, price didn't go under $25,000. So understanding the structure of the market is vitally important to being able to have more confidence in putting your money into the markets. Now, I go into great detail in this with TIA Premium, with our members there, weekly live streams, and plenty of content to help you gauge how to do this for yourself. The sale is coming very soon, so make sure you're subscribed to the email list. That is it right there. You'll also be on the free crypto and economic report that comes out once a week. So make sure you're onto that so you can get an understanding of how to put this together for your own trading and investing plans. I use this for the rest of my life. So that's how we were able to do it there. The 20,000 not going underneath, the 25,000 never going under that again, and then the $30,000 level breakout, never going under that again. You have to remember at the time, everyone was still thinking that we would see further downside. So here we are, confirmation that the price is unlikely going to go under $60,000 again. Michael's video, I'll leave a link to that there. Meanwhile, let's have a look at some of the upside targets should this occur. Should we not see Bitcoin go under $60,000 again? So I'm just going to play a couple of little price forecasts. I know how much everyone loves this thing. Don't bet the house on it. Price targets are for fun, and there is no guarantee that they'll be hit, and I am not playing my portfolio to a price target and then selling at a price target. You do you at the end of the day. What I'm looking at here are priced areas that I would not want to see Bitcoin hit and fail at. So on a long-term time frame, I'm looking at our swings here. So we've got the Gann swing indicator. That's what we use for our trading and investing. So looking for price targets for failure in the market, and also those swing lows to help us exit positions, or swing tops to help enter positions. And you're going to flip it if you're doing short trading as well. Okay, so to the upside, my 50% is roughly around $78,000. That is this entire range projected from the current low. And as I've said before, it's probably unlikely. There's no guarantees in this game, but it's unlikely that will break through 53,000. So I'm now going to use that as a pivot point, or basically like an anchor for the price, and then project forward these numbers. So in terms of the top, 78K, why is that really important that the market does not fail there, at least for too long? Well, that's the 50% of this entire range. So if it were to fail at 50%, that would probably mean we got testing time at these lows again, which could potentially mean 78K or around that number is going to be the top. I am not in the camp that I think that's going to happen. We have to wait and see, of course. I don't have the crystal ball, but if it did hit that level and then basically pause for the monthly closes, it's not a great sign. It's not the end of the world. It could just pause up there and then hold up above 69K and then get going, which would mean it's slightly weaker than if it were to slice through the 50%. If it's going to slice through 78K, that is amazing. So now I can use this to help me understand or identify strength and weakness in the trend. Do you know how important that is to understand the strength and weakness in a trend? Now, there are multiple examples of the price slicing through 50% and then going on to 100% of the move. That is what you want to see. A nice slice through 50% really increases the probabilities of the price then getting to roughly that 100% price target. And that 100% price target is where that green arrow is, about $100,000. About $102,000 would be an exact 100% repeat of this entire range projected from that low. So looking pretty interesting if it can get past 78K. Of course, 78 is very close to 80K, which has been a number that everyone's been using as a price projection, of course, and also a psychological level. So plenty of work for Bitcoin to do. Got to get through the tops first at 73, 74K, then the 50% level, then the 80K, and then we can potentially look at this target here at roughly 100. Now, for the fun of it, what happens if it's to go 150% of this range? So basically extend the range, meaning there is far more buyers, more interest in the price moving more than what it's already done. So this is a big range here from 25 to 74. What if it's going to do more than that range of 100%? Maybe it does 150% of that range. Where does that take price? There it is, $126,000. Not bad, but probably people want more. What if it did double this range from the low? Let's have another look. $150,000. Let's have a look at what it did previously. So here is the low to the top, so that entire move to the upside, and then the corrective move to that low before it broke out. So another important range there. So let's have a quick look at that. That move was 3 times this move, exactly 3 times that move from the low. That's how great some of these price extensions, GAN extensions, can be if you understand how they work. Of course, TI Premium, we go into great detail with that, but not to bang on about that too much. Let's have a look at the price targets here. You can see the market moved up 100%, had a little bit of a stall there, 40,000s, or in those mid 40,000s, there was a bit of consolidation happening, and then the ETF peaked at exactly 150% of this entire move. See, $49,000. That's the ETF peak in January, 48,900. So basically a few $100s off that exact top in terms of a percentage. Fractions, very, very small percentages. Then it ran up to 3 times this move here. Can it do 3 times again? Possibly, but again, now we're going to be using bigger numbers, so it just gets a little more difficult for the price to move up at the same rate as it did earlier in the cycle. I hope that's starting to sink in for a lot of us. So we're not going to get too greedy and hope for 3 times being $200,000. It can happen. Maybe we get this long and strong wave 5 that just booms to 3 times and repeats what happened back here. Great, we're all going to be rich, living, I don't know, I was going to say on the moon, but who the frig wants to live on the moon? It seems like a boring place, just like Mars. Why would you want to live on Mars? So that's what I've got here with the price targets. Now, what you don't want to see, or if you do, use it as a trading altcoin, get in and out. You know what I'm talking about. It's this piece of dog shit here, XRP. The last couple of days, the XRP people have gotten really excited. 1, then comes the 2 to the 3 to the 4. Everybody drunk out on the dance floor. Basically, losing 5,000 and getting $50 from it. As I zoom out, you'll see just how ridiculous this piece of dog stuff is, because they've had to lose for months, if not years, just to gain back a few little bucks here. And for most people in these sorts of coins, they keep buying dips all the way down. So basically losing money all the way down just to get excited by a few days of upside. Now this white line I've got across here is 10 years ago. So this white line just here, XRP 10 years ago, almost to the day, there it is, July 2014, was trading at almost the exact same Bitcoin value, which means Bitcoin has gone up the same as XRP in these 10 years. Just looking at it, July 2014 to July 2024. If you bought it in July 2014, went to sleep, woke up in 10 years later, you basically have the same gains on Bitcoin as you do with XRP. And that is not an altcoin that you want to be holding. Trading, different story. Look at the booms and busts, major booms and busts. But it doesn't seem like it's getting those major booms and busts anymore. Of course it could, but you do you. So what's happened over the last few days for XRP? It's finally broken out of a pretty significant downtrend. It's broken out of some significant resistance levels and is attempting to continue on the consolidation up to next price targets. So if you're a trader and you're not emotionally attached to it, you're not married to a piece of junk like this, then go for gold. If you're invested in it and heavily invested in it for a long time, maybe do some soul searching, see what you can do about this, and make the most of this cycle, because I don't think you're going to have another opportunity in the near future after this opportunity. Hopefully I'm wrong, but if there's anything to do with the 18.6 year cycle, the next stage could be quite dramatic after we get this peak. Good times ahead, traders, let's go for gold, right? But after that period, that could be a little bit serious for many out there. So make of it what you can and get the hell out when the time is right. Lastly, Solana, also holding up relatively well. So basically just a follow up from yesterday. Not much has happened here. A few bucks off, hit the 50%. It needs to get above 165. Still looking okay. Render has been a big talk at the moment because they're rebranding. They're not getting delisted. They're just rebranding. $7 key level to get above, being the major 50%, and then $8 above this weekly swing top. That would be ideal for consolidation and more confirmation that it's going to continue up with this next stage of the cycle. They're the two I'm going to leave you with today, but I'll do more in the coming days. Friday is tomorrow, and then I'm traveling over the weekend. But until then, enjoy your weekend, and I will see you probably tomorrow and go for a surf now. All right. Cheers, guys. Take care. Peace out.